Hello and welcome once again for the case study discussion. In this video, we'll discuss the case study number 10. Are you ready? Let us start a discussion. What is given? Jibra Limited is a part of multinational company. It is required to prepare and present its account following international financial reporting standard. So just delete it and just write down Ind AS. Okay, sir. Jibra Limited enter into 10-year contract with the supplier for the right to transfer oil from India to Bangladesh through supplier A's pipeline. The contract provides that Jibra Limited will have right to use 95% of pipeline capacity throughout the terms of contract. So of course, you from the para you can understand this is related to Ind AS 116. Now, as per Ind AS 116, a contract will contain lease if there is an identified asset. Identified asset should be a physically separate asset. Correct now. But sometime what happens if suppose a portion of the asset has been given or to use and that portion represent substantially all of the capacity. Substantially here means 90% or more than 90% capacity. Then also it will be considered as identified asset. So it is given for 95% of the pipeline capacity. Therefore, in this case, this pipeline will be considered as identified asset, and the contract may contain what lease if other conditions are satisfied. I hope you remember Ind AS 116 wala para. Yes, sir. Jibra Limited on 1st April 2022 borrowed 12%, 75 lakh to finance the construction of two assets, factory and office building, which can be identified as qualifying asset. So it is a specific borrowing. Now whenever there is a specific borrowing, we capitalize borrowing cost to the extent of borrowing cost incurred minus any income earned from temporary investment. The construction of both the assets started on 1st April only. The loan was availed and disbursed on 1st April only, because it means the 1st April will be the date of commencement of capitalization, and was utilized as follows, with the remaining fund invested temporarily at the 8% in government securities. We can see factory building on 1st April 30 lakh, 1st October 20 lakh, office building 1st April 10 lakh, and on 1st October 15 lakh. It means out of 75 lakh, 50 lakh was used for factory building and 25 lakh was used for office building. And it is understood that for the first 6 months we have used only 40 lakh, and for the next 6 months we have used what 35 lakh. Means this 35 lakh was not used for the first 6 months. So in the first 6 months 35 lakh were invested outside the business at a rate of 88% rate of interest. So now we need to calculate borrowing cost to be capitalized. So again, borrowing cost, that the borrowing cost incurred for factory building and office building. First you need to find out, so it will be the total borrowing cost on the loan. The total borrowing cost will be calculated on the total amount of loan. So for factory building it is how much? 50 lakh. So 50 lakh into 12% for how many months? 12 months. So it will be what? 6 lakh, and 25 lakh into 12% for the entire year, it will be 3 lakh. Understood? And can I say the investment was done for the first 6 months to the extent of 20 lakh amount and 15 lakh amount. This amount will be invested in the first half. So 20 lakh into 8% into 6 by 12. It is coming how much? 80,000. So 80,000 will be income earned. Got this point? And for 15 lakh into 8% into 6 by 12, it is coming how much? 60,000. So the amount of borrowing cost to be capitalized will be 5,20,000 for this, and this will be 2,40,000. I hope you have understood this. Similar question we have in our Ind AS 23 study matter here. Correct? Yes, sir. Chalo. Let's see what the question they have asked. Jibra Limited has two cash generating units, X and Y. There was no goodwill within units carrying value. But there is no goodwill. Okay. The carrying value of CGU X is 10 lakh and CGU Y is 14 lakh. So X and Y they have given. X and Y they have given carrying amount how much? 10 lakh and 40 lakh. Okay. The company has an office building which is being used for admin office of the company and has not been included in the above value and can be allocated to each of the CGU on the basis of their respective carrying amount. So can you see this can be allocated, it's become a corporate asset. What is the carrying amount given? The carrying amount is how much? The carrying amount of the office building is 10 lakh. So 10 lakh will be allocated in 1:4 ratio. It is given. So 10 into 1 divided by 5 is how much? 2 lakh. So corporate asset will be allocated 2 lakh and 8 lakh. So total will come how much? 12 lakh and 48 lakh. 12 lakh and 48 lakh. Okay. Now recoverable amount are based on the value in use, that is 10 lakh and 50 lakh. The recoverable amount is 10 lakh and 50 lakh. So you can see impairment loss for this will be 2 lakh and for this will be nil. So this 2 lakh will be allocated to this asset in the ratio of their carrying amount. Let's see what the question they have asked. Jibra Limited on 31st March 2003 paid 125 lakh on acquisition of 100% interest in Marco Limited. So 125 lakh is PC. Marco Limited net asset on the date of acquisition is having a fair value of 70 lakh. So fair value of INA is given. In addition, Marco Limited also had the following right which have been recognized in the books. Trademark name Super, which is being discounted, which is using discounted cash flow technique, is valued at 4.2 lakh. So of course, trademark can be recognized in the books because it will be the definition of intangible asset. So fair value is given 4.2 lakh. Sold distribution right for an electronic product, future cash flow which is estimated to be 3 lakh per annum for the next 5 years. So any distribution right, if it has future economic benefit and if there is a control, so of course it is an identifier which will meet the definition of intangible asset, so can be recognized as an intangible asset in the books of acquirer. So we need to find out the fair value because fair value is not given. So 3 lakh is the future benefit for the next 5 years. The 10% discounted is considered appropriate. The annuity factor for the 5 years given 3.79. So it will be 3 lakh into 3.79. So how much it is coming? 3 into 3.79. That is how much? 11 lakh 11.37 lakhs. Okay, let's see what the question they have asked. Jibra Limited has an investment property building which is being carried in the books as on 31st March 2022 at 25 lakh. So what is the carrying amount? Carrying amount is 25 lakh. During the year ended 31st March 2023. So during the year ended 31st March 2023 means at year end, the company Jibra Limited has stopped letting out the building and started using it as office premises. Means they have stopped it for giving on rent and they have started using it for own purpose, means office building. Means it is a reclassification of investment property to property, plant and equipment. On 31st March 2023, management estimate the fair value of the building is 22 lakh. The fair value of the building is how much? 22 lakh. So on 31st March 2020, the fair value of the building is 22 lakh. The cost price of the building is 20 lakh. The cost price of the building is 20 lakh. And as per the cost model, the written down value will be 15 lakh. So this become carrying amount of the asset as on 31st March 2023. The carrying amount is how much? Correct. I think there is some mistake because at the beginning they have given book value is 25 lakh. So of course the cost price should be more than this. Now they have given cost price 20 lakh. So I think there is some typo mistake. This 20 lakh should be more than 25 lakh. Correct now. However, reclassification is done at carrying amount. So this information is not required. This information is not required. So reclassification will be done at carrying amount and carrying amount is given how much? 50 lakh. So correct option if they have asked reclassification date means at what amount the reclassification is done, the answer will be what? 15 lakh. Let's see what they have asked. I hope you have understood. So any reclassification from investment property to PP or from PP to investment property should be done at carrying amount, or it can be reclassified from investment property to inventory or inventory to what? Investment property, that will be also done at carrying amount. Okay, let's see what are the question. MCQ. Case 1. Should Jibra Limited treat the pipeline as identified asset while determining the contract as lease as per Ind AS 116, where it has a right to use 95% of the pipeline capacity? Yes. Answer is yes. Case 2. Will your answer be different if Jibra Limited has a right to use only 65% of pipeline capacity throughout the terms of contract? Yes, in this case, this will not be what? Identified asset. So what they have given? Jibra Limited should treat the pipeline as identified asset in case 1 only. This is only correct. option number A is correct. If there is no need to read, but if you want to read all the option. The cost of the asset and the borrowing cost to be capitalized of the two qualifying asset as per Ind AS 23. They have asked cost as the borrowing cost to be capitalized. Borrowing cost to be capitalized. So already we have calculated how much borrowing cost we calculated. We calculated 5,20,000 plus 2,40,000. So 5,20,000 plus 2,40,000. How much it is coming? 7,60,000. So the borrowing cost to be capitalized will be how much? Right? We have done some mistake. 1 minute. 5,20,000 plus, but the option has been given. So the cost of the asset and borrowing cost to be capitalized for the two qualifying asset. So they have asked in a combined basis. So the cost to be capitalized, I think, 1 minute. They have given cost to be capitalized. So it will be 50 plus 5,20,000. So 55,20,000. 55 lakh. So this option number C means, I think they have given cost of the asset and borrowing cost, but the option has been given regarding only cost. So option number C is correct. You can see the total is what? So 30 plus 20 plus 5,20,000. So it becomes 55,20,000, and this is 35 lakh. This is 25 lakh plus 2,40,000. So 25 plus 2.5, it becomes 27,40,000. So 27,40,000. This answer is correct. So they have given in the option only cost, but they have asked what? Cost and borrowing cost. Correct now. So they have given only the cost after capitalization. So don't be confused with the option. I was also thoda sa confused what they have asked, but when you read the option, you have to apply thoda sa common sense. Correct. So option number C is correct. Option number C is correct. Calculation of borrowing cost to be capitalized. Already I have summarized. Okay, yes sir. Now the amount of impairment loss of CGU-X and CGU-Y. So there was only impairment loss related to X. There was no impairment loss of Y. What was the impairment loss? Already we calculated 2 lakh was the impairment loss for X. So 2 lakh was the impairment loss of CGU-X. This is the option which is correct. Correct now. Option number A is correct. Got this point? Goodwill and other intangible asset arising on the acquisition. So they have asked goodwill and what? Other intangible asset. So PC was how much? PC was how much? So they have acquired at 125 lakh. So PC was 125 lakh. They will add on fair value of INA. Fair value of INA. So they have given fair value of tangible, means they have given fair value of building. Sorry. Yeah. They have given the net asset is 70 lakh. So 70 lakh will be added. There were two intangible assets also acquired. One was 4.2 and one was 11.37. So 4.20 and 11.37. Total become how much? 70 plus 4.2 plus 11.37. It is given 85.57. Correct. So what will be goodwill? Goodwill will be how much? It is 125 minus 85.57 is equal to what? 39.43. So goodwill is this much, and you need to add intangible asset because they have asked goodwill and other intangible asset. So intangible asset is 4.20 plus 11.37. How much it is coming? So 39.43 plus 4.2 plus 11.37. So what is the answer? Answer is 55. So option number A is correct. Option number A is correct. Understood? Correct. Now be careful. If you are not reading the question carefully, so your answer will be 39.43 and you will take option number B. So you read what is the demand of the question carefully. Got this point? Then last point, Jibra Limited should reclassify the investment property into owner occupied property at its carrying amount. Carrying amount was how much? 15 lakh. So option number D is correct. Option number D is correct because reclassification was done at year end. So fair value should not be considered because investment property is never revalued. There is no revaluation model for investment property. Correct. So fair value should be ignored. Reclassification will be done at carrying amount. Let's see what the option has been given. So point number 1, option number A is correct. Point number 2, option number C is correct. Point number 3, option number A is correct. Point number 4, option number A is correct. Point number 5, this is not correct because the answer is actually given as per IAS 40. But we need to apply Ind AS 40. As per IAS 40, there are two options for subsequent recognition of investment property. One is one is cost model and one is fair value model. So that fair value model has been deleted in case of Ind AS 40. Therefore, the answer as per Ind AS 40, just corrected, will be how much? 50 lakh. The answer as per Ind AS 40 will be 15 lakhs. Be careful about this. Understood? Got this point? So with this we completed case study number 10 also. I hope you have understood. Chalo. Next video will meet with case study number 11. Till then, bye bye. Enjoy your study. Keep studying. Love you all.